welcome to the webinar. If you're watching the recorded version, it was held live on Tuesday, June the 13th at 7:30 in the evening. My name's David Jones, and I do this in conjunction with Ayondo Markets. So tonight's webinar, we're going to look at the idea of social trading, where you follow other traders and hopefully have a team of profitable traders where their trades are getting automatically executed on your account. I'm a big fan of social trading. I'm a bit of a convert, I think, over the last 12 months. I've been running a couple of accounts for the last 12 months. You can read about one account that's been up and running since, I think, February, and I've been blogging about it on my website, and that's tradeafter.com to go and read about that. I think it's up about 5% over the last 3.5 months or so, and fairly low levels of risk. But we're going to explain this evening just the concept of social trading. It's pretty straightforward. You know, what we're looking to do is hopefully find consistently profitable traders and have their trades mimicked on our account. But it's not as if you have to sort of sit there, cross your fingers, and hope everything works out okay. There are various levels of risk control that you can put in place, and we'll spend a bit of time talking about those as well this evening. The idea behind social trading is, or copy trading, whatever you want to call it, is rather than sitting there and figuring out what do we buy, what do we sell, where does our stop loss go, there are traders on the Ayondo platform who make their track records visible for all to see, and then you can decide if you'd like to follow that trader and what sort of size trades you want when you're copying that trader. But we'll go through all of that step by step this evening. So let's just flip over to the website. Let's just hold on a second. Which screen do I need? So we'll have a look at screen 3. So this is the Ayondo website. So I think you can see all of this information. I think even if you don't have an account with Ayondo. So I've just logged in now. The login I'm using is Social Trader 68. Let's click on my account. This is an account I've set up just for these webinars, so it's got just over £400 in there. It's not following anybody, so we're starting right from scratch. So let's click on rankings list. So I think when you first set up your account and you're thinking about what traders do I want to follow, the rankings list is really where it all starts from. And I think the way of looking at this is it's like a league table of traders who trade on Ayondo, whose trades go through the Ayondo platform. They make their track records visible so we can see just how badly or how well they've been doing over the period. So let's just extend this to all of them, and if we flip off RMT, I've got a filter set up there. So RMT is real money traders, because some people do actually trade on a demo basis and make their track record available, but one of the filters I put in place is they have to be trading with real money. But for now, let's just have a look at everybody. So at the top up here at the moment, we've sorted it. We've sorted it by trades per month, so who's trading the most. We'll sort it by the profit and loss at the moment. But to look at, so the most active trader is actually one of the best performers as well. So Votan has been one of the most active. The R next to their sort of avatar there, that means they're a real money trader. So this person is trading with real money. And the star there means they've got quite a few followers, so they're quite a popular trader. The one below, you can see Ayon has turned in 128% profit, so that's pretty chunky gains, but doesn't have an R next to their name, so they're not a real money trader. So that's all been done on a demo platform. So to start off, for me, when I'm looking at traders to follow, I want traders who are trading with real money, because my view is, if I'm going to follow you with my account with real money in, then the very least you should be doing is trading with real money on your own account. So let's click now. So we've narrowed the list down to 248. You can see up here potential traders to follow. Let's sort it by P&L. Let's see who's been making the money. Here we go. If you've been on these webinars before, you'll know this one is always a popular one. Edel Metal hits the odd sort of quiet period now and again, but I think I've been running these webinars for probably about a year now, and Edel Metal is one who is very often near the top of the list, and it is actually top here based on recent performance. So the P&L, let's just walk across. There are various career levels that can be gone through. So because this one has got all the badges, it means it's quite an experienced, he or she is quite an experienced trader on the ayondo platform. Risk score is 7. The risk score is graded between 1 and 10. The lower number means a lower risk. So down here we have Jane, who's got a risk score of 3 compared to a risk score of 7. So it suggests that Elon Mittal is a bit more of a riskier prospect than Jane. It's probably down to the drawdowns, but we'll come to that in a second. So the P&L, we've got P&L since they first started trading. We'll drill down in a second and find out a bit more about how that P&L has been achieved. But the profit made 184%, so not quite doubled, not quite trebled, sorry, the account since the start. But it's not just about profit. You know, we have to think it's all well and good having a great top line profit figure. And let's say you made 200% in a year, but if along the way your account at one point was down 90%, it suggests it's maybe not the best strategy that you want to be following. Because I think when I'm choosing to follow other traders, I want to try and smooth out the day-to-day volatility. So I think if they've got a relatively big drawdown, that's something I look to avoid. 23%, I mean, that's probably getting near the extremes for me. You can see Smart Jack down here, this trader number 4, has made 87% profit, but along the way lost a third of their account. You know, so it's all about what your appetite for risk and volatility is. When did they last place a trade? For example, Lectorius here, he's number 3, he or she is number 3, but hasn't traded for 40 days. Elon Mittal placed a trade in the last couple of hours, does just over 390 trades a month on average, and you can see Elon is a popular trader. It's got 1,700 followers. And the other important thing for me is the shape of the charts. You know, my background is technical analysis and charting, and I think in the same way that we have markets that trend, we have, you know, clearly the P&L, people's profit and loss trends as well. And what I'm looking for, maybe not surprising, is a nice smooth trend in the overall profitability. I don't want a trader who makes it all in one month and then spends the rest of the month giving it back, the rest of the year, for example, giving it back, but still ends up with a healthy figure. You know, what we want, ideally, somebody who's making money on a regular basis and the trends heading in the right direction. Let's just change this and say over the last year. Let's see who stacks up over the last year. Here we go. So it's changed around a bit. Elon Mittal has slipped down to 4th, but still made more than 50% return over the last year. But Votan, this trader here, has made the best return. So a return of 112.9% over the period. Maximum drawdown 17.9%, so not too bad. And there's the shape of the P&L chart. But you can see, I think, straight away for me, and I look to follow sort of 5 traders. 5 is the max you can follow, and we'll look at that in a bit more detail in a minute. But I think we've got, you know, and in that top 10 of traders, I think we've got an interesting bunch there to sort of get started with. But let's find out a bit more detail, because these are only just the headline figures. So let's sort of drill down to the next level and find out a bit more. Let's start off with Votan. Let's click on this one here. So now we're going to go to this trader's page. So we'll see a whole load more information about this trader. So there's a detailed P&L chart just in there, so you can see how it was performed. And for comparison, down here, the purple dotted line, this is the German DAX. So this is the German stock market index. You can see clearly this trader has outperformed that. So up about 112%. The track record only goes back to November last year, so it's only been trading for, what's that, 6-7 months. But let's look at that in a bit more detail in a second, because there's something else we need to be aware of. 976 followers, a popular one, not surprising with that sort of P&L chart. So the statistics: volatility, 15% volatility, number of trades, just over 4,000 trades. Winning trades, this always makes me a bit nervous. 95% of trades have been winners. Now that can suggest somebody who maybe has a problem taking losses, you know, just sits there waiting for the market to come back. And if they've been trading something like stock market indices, for example, in recent months. That's a strategy that has worked, and it works until it stops working, and then the market reverses and a whole chunk of profit is given back. So that's maybe one cause for concern. Winning months, 87%. Again, maybe a bit on the unrealistic side. I don't know, 8 times out of 10, 9 times out of 10 nearly, winning months. Last activity, 9th of June. Real money trading. Now this is an important one. Even though Votan's track record goes back to November 2016, we can see here, members since November 2016, they've only actually been trading with real money on the platform since March 2017. So what's that, 3 months or less this one's been trading with. So that's, again, something for me that might make me think, is there a better option out there for me to follow? Saying that, since the trader moved to real money around about here, it hasn't affected the performance. The overall P&L looks the same. So clearly seems to be trading the same sort of strategy they were trading on a demo account. So the fact that P&L has continued to go the right way is maybe encouraging and mitigates maybe some of the worry there that we don't have a massive real money track record. And then the maximum drawdown, how much has been given back along the way? I think that's a pretty good figure. Less than 20% of the profits have been given back in these dips. So I think that's something that's not too horrific. Clearly, if we're trading, I think we all know, if we've ever traded or invested, you need to, when you make money, you need to give risk giving back some of that money in the pursuit of further profits. So giving back, I think, less than 20% is a reasonably sensible figure. Let's have a look now at the monthly data, because I think, again, this is very important, because we don't want a trader where the bulk of their returns have come in 1 or 2 months. They've made a bucket load, but they made it in they just went all or nothing 1 month and had a fantastic return. Again, that's not a very sensible low risk approach to trading. So let's have a look at this data, and straight away we can see the figures are somewhat flattered, or last year anyway, 2016, somewhat flattered by November's figure, 49% return. Now to me, that suggests a pretty aggressive level of risk, and again, could be something of a warning sign. December a bit more sensible, 2.6%. This year though, we do have, I think, more realistic monthly return figures. So 5.5% in January, 9% in February, 6%, 7% in April, 5% in May, and slightly down 0.3% for the month so far. So the year-to-date return just over 39%. So we can see exactly how that's been achieved. The next bit of detail we have is what do they trade, and a common theme, not with everybody, but with lots of these top traders, is they stick to 1 or 2 markets. And you can see nearly 40% of trades have been carried out on the Wall Street index, the Dow, and 32% nearly have been carried out on the German 30, the DAX. So more than 70% of the focus has been on the stock market indices, and also in here as well, on the DAX as well. So a big chunk on indices. So clearly focuses does sort of diff off now and again into gold and some other markets, but the bulk of it is on the US indices. And then down below we have a bit more detail about their risk metrics. You can also scroll through and see some of the trades. Got a lot of open losses there, which again, for me, that could be a warning sign, flagging back to this 95% of winning trades. Maybe doesn't really like closing trades for a loss. And then we can scroll a bit further and see any closed trades, a whole list of closed trades if you want to go through them. Okay, so there's one way of looking at the trader. So clearly, let's say I decide to follow this person. I think, well, do you know what? It looks a little bit risky. Has quite maybe an aggressive approach. Hasn't got that much real money track record. But I'm gonna chuck him into my portfolio with 4 other traders who I may be a bit more comfortable with. So let's say I decide to follow this trader. I'm gonna click on follow. So what happens next is this person, it was Votan, wasn't it, gets added into my portfolio. Now here, this is a portfolio, I've put 4 other traders in it already. Edelmetall, who we touched on briefly at the beginning, PsychonNet, Janhe, and DAXCall 3. So they're 4 traders who've got pretty good track records. And I've just added Votan into the mix. Now, at the moment, nothing is happening because I haven't clicked execute on my live account. So I'm not actually following any of these traders' real trades. They're just sitting there in my portfolio. So let me just talk you through what we've got here. So first of all, we have the blue dashed line. This is an idealized, we say, replication of what would have happened if I'd have followed these 5 over the last year. I'd have made just over, what's that, about 55%. We just saw it there at the end. A 55% return if I'd have followed these over the last 12 months. Which again, of course, is idealized. We have to say past performance is no guide to the future, but it gives you a feel for how your portfolio would have performed. And down here we have all of their individual performances. But there's a first level of risk control that we can do now, because if I was following one trader, I had just one trader in my portfolio, I can choose what size to follow him or her at. So if they risk losing, for example, 2% on their account with the trade, their stop loss means they'd lose 2% of their account, the trade can be done on my account at the same size, a slightly smaller size, or a bigger size. So I can vary from trader to trader how big my trades are in relation to their trade. So for example, if we go to Edel Metal, we click on settings, we have this slider here where we can move up and down what sort of size we're following these traders. But there's another level of risk control because I do have more than one trader. So because I'm following 5 different traders, my risk is already cut down. So if I've got £400 in my account, let's say Edel Metal has got £10,000 in their account, and they do a trade where they risk losing 2%, so £200. That trade will be done on my account, but because I'm following 4 others, it will be done at 1/5 of the size of Edel Metal's. So already, because I've got other traders in here, the size of their trades will be diluted on my account. And I can change this if I want to. So the default setting, if I'm following them like this 1-to-1, what it means is my effective risk factor is 0.2 because I'm following 4 other traders. So if you follow several traders, then your risk is distributed evenly amongst all the traders. So with 5 traders in your portfolio, you then follow every trader with 1/5 of the size. But if I'm confident in Edel Metal, if I bump that up to 5, what it means is if Edel Metal does a trade where he or she risks losing 2%, then the same trade is done on my account, risking losing 2% of my account. So I'll put that at 5. Let me just whiz through a few of them. Let's go to PsychonNet. Let's bump that one up to 5 because that's been in there a while. Jane, I've got this in another account as well. Let's bump that one up to 5. DAX call, 5 already. And Votan, because it's a new one for me, let me wind that right down. So if I have that down at 1, it means my effective risk factor is only 1/5 of the size they're trading. So because Votan's a new one in my portfolio, if I think, well, I'm maybe not too sure about this, good track record, but let me see, let's give it a couple of months, I may decide to follow them at 1/5 of the size they're trading. So if they risk losing £200, I'm risking losing 1/5 of that, or 1/5 in percentage terms, if that makes sense. So I confirm settings, and that's it. It's all done. So now, all I need to do is click Execute on Live Account. And once you do this, there's another level of risk control we can put in, but let's just do that first of all. Execute on Live Account. So there's another warning screen that comes up here. Clearly, because these are active traders, they have trades that are open already. They may have opened them today, yesterday, a week ago, 2 months ago, whatever. So Edel Metal, for example, has 120 open trades. PsychonNet has 19, and so it goes on. So what you can do, you have a choice here. You can choose to open up the same trades they have, but of course at the current market price. So if Edel Metal bought the Dow yesterday when it was 100 points lower than it is today, you're not going to get yesterday's price. You're going to get the price trading where it is now. So for me, I don't want to follow any of their existing trades. I just want to follow the new trades. So we'll click on Execute Portfolio, and that's it. We're now nearly ready to go. Okay, so here's my account with £432.72 in. I've got no P&L at the moment because clearly until one of them does a new trade, it won't be carried out on my account until they do it. And again, it happens automatically. So if in the next 5 minutes Votan buys the Dow, then my account will buy the Dow as well. But there's another level of loss protection we can build in, and it's almost like having a stop loss on the financial value of your account. I'm sure you're all familiar with what stop losses are. And if you buy something like euro dollar and you put a stop loss 80 points below, you're saying if the market drops 80 points, please take me out. It's a way of trying to limit your risk. And you can do this, it's another level of risk control you can do, and it's this loss protection here. So what I can do, I can set it, it's got to be at least 5% away from my account balance. So my account balance is 432. So if I say, well, if my account balance drops to £300, close out all open positions and stop following any new trades. So it's a way of limiting the risk. So if I click on save, that's it, it's done. So now I've got the stop loss effectively on my account at 300. I'm waiting to see what trades they do, and as soon as they do a trade, then that trade will be carried out on my account in real time. And it really is as straightforward as that, and it's very easy. You know, I've run a couple of copy social following accounts, and you know, like the one I blog about on my website, where I put in £2,000 and it's currently about 2,110, I think, something like that. And all I do, I don't sit there and watch it every day. It's quite weird in the beginning. If you've never done this before, my background, you know, I worked in the spread betting and the CFD business from the early 2000s. So I've always sort of used spread betting and CFDs, but I've done it myself. So I do this in addition to my own stuff. And it's a bit strange in the beginning when you see trades going through on an account that have got nothing to do with you. But once you're happy with your risk controls, you know, I probably check mine a couple of times a week, and it's really just a matter of clicking on my account and seeing it there. Let me see. What I'm going to do is I'm going to open up the other account I've got, the one I've been blogging about, and let me show you what that looks like, because that has got open trades on. I think at the moment it's running about an 80 quid loss, but let me see if I can just bring it up. Just bear with me a second, and we'll see if that's there. Okay, here we go. So this is the account. So this is another account. So this is the one I sort of write about on my website. It's taken a bit of a few losses. It's got a few running losses at the moment. So these are the people I'm following, first of all, then we'll jump back. So DAX called Jane, Hansi Investment, 1310 Info, High Trade 3, and I've got to add another trader in. But there's the account at the moment. So realised profits about 174 quid on £2,000, and it's currently running an £80 loss. And you can see you know, how that updates in real time. And down here you can see the positions, and they're really small. You know, I've got the risk dialed down really really low. You know, so it's like it's fractions of a pound a point that this is being traded on my account. And if I scroll down here, we'll see recently closed positions. It's pretty small profits. It's small profits and small losses because I've got the risk dialed right down, just to show people, I think, how straightforward it is and how you can set the level of risk that you're comfortable with. But all I do, you know, you can view this through a browser. I just, you know, have a click maybe a couple of times a week. I've got my stop loss protection on. I've got the risk dialed right down for most of them, and just log on a couple of times a week to see how things are doing. And then look to review traders. Every month I'll go in and look at the track record of these traders. So let's have a look at this one here, because this one had been doing well. Maybe it's gone a little bit off the boil lately. Let's take a look and see what the P&L looks like. Oh, it's not too bad. It's just having a little bit of a flat month. This is an interesting one though. Real money trader since December 2015. So that's, you know, good old track record. Winning months quite realistic, 73%. Winning trade 62%, which for me is a bit more like it. Has the odd sort of shock drawdown now and again, but the P&L just sort of grinds its way higher fairly steadily. So I sort of view that as a fairly low risk trader there. But it's very easy to log on, see how your traders are doing, and if you decide to change any of them, you know, stop them trading. So let's just jump back to our other example. There we go. So there's still no trades gone through yet on this account. It's a bit of a quiet night this evening. I think tomorrow night we've got the US Federal Reserve latest interest rate decision. So the US markets are a little bit treading water this evening. They're not very active. But of course, if I log on and change my mind, I think actually I need to rethink my whole strategy. Now it's really easy just to click on stop execution now. And it says, right, do you really want to stop execution for your portfolio, social demo? Yes, I do. And if I've got any open trades, they'll be closed out and I won't follow any new trades. So there we go. So I'm back now to having these 5 people in my portfolio, but not actually following any of their new trades. And it's really as straightforward as that. You know, I first started doing it just over a year ago, I think, and I started off with a demo account. Because if you log on, if you set up an account on ayondo, you can set up a demo account and trade on that for sort of 30 days. And I made about 15% in May of last year on a demo account, but with ridiculous levels of volatility. You know, the P&L, the profit and loss, was really swinging around, and that's when I thought, well, I need a slightly lower risk approach. But it does give you a feel, I think, for the sort of things you should be looking at. So to recap, the sort of stuff that I look for: real money traders. So actually trading with their own cold hard cash rather than just on a demo account. Smooth historical P&L. You know, I want to see a nice chart of the profit and loss. You know, nothing too choppy, but hopefully a nice steady uptrend. This drawdown is really important. You know, it's no good if someone makes 50% a year if along the way they've lost 60% of their account to bounce back. You know, that's too much volatility. Low volatility, ideally. You know, you can get enough volatility from your own trading day to day without adding it in with people you're following. And the detailed search lets you refine all of these. So, and that's it really. It's as straightforward as that. I'd say if you've never done it before, just try it. You know, you can see that you can dial that risk right down. You know, you can open. I think you can open an account. I think the minimum is £1,000 to open an account, but you can put a stop loss on your account value. So there's another way of controlling that risk. To read about sort of setting up of my account, how it all worked, adding traders, the sort of things I look for, if you have a look on tradeafter.com, there's some details on there. If you've got any questions after this, drop me an email. My email address is david@tradeafter.com. I'm on Twitter as well, sort of do market commentary and stuff like that on Twitter, and I'm at Jones the Markets on Twitter. Every Wednesday, I do a webinar with ayondo, Wednesday lunchtime at 12:30, which is a market outlook. So that's a pure looking at what's happening in markets webinar rather than talking about social trading. But I think we'll wrap things up there. We're just taking about 28 minutes, so that's good timing this evening. I hope you found it interesting. You know, and it's maybe, if you've never done it before, it's opened up maybe a slightly different view on it. But I think the best way to understand how it works, log on and try a demo or put a small amount of money in and play around with it. But for me, so far, as you'll see on my website, the results have been positive. You're not going to sit, it's not a get-rich-quick scheme. You're not going to sit there and double your money every week unless you take on ridiculous levels of risk. You know, but I think it's a way of gaining market exposure and just smoothing out some of the bumps and some of the day-to-day volatility. But we'll wrap things up there. Thanks for coming along. We'll do this again next month. And like I say, every Wednesday I do this a market outlook webinar with ayondo. But we'll stop things there and I'll let you get back to enjoy the rest of your evening. But thanks for coming along.